Today, I want to talk about how Adam Aron has just revealed why he hasn't previously commented on synthetic shorts and how he's effectively confirmed a significant synthetic shorting investigation. Adam finally commented on AMC's FTDs and exactly what he's heard back from the NYSE and from FINRA. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, as Practical Stocks tweeted, Adam Aron has just said the following regarding AMC's FTDs on the earnings call the other day. He said, "I have to be really careful with what I say. We've gone to the New York Stock Exchange at high levels and we've gone to FINRA at high levels too, but we can't share with you yet what we've discovered." This to me sounds like there is a significant investigation into this synthetic shorting and into the FTDs in AMC, but Adam Aron cannot legally disclose what the NYSE and what FINRA have uncovered. It also suggests that the NYSE and FINRA have indeed discovered something very, very interesting and likely very illegal, but Adam Aron can't share it yet. As Biotech Moose added, he said, "I think many people are missing what wasn't said by Adam. Why does he have to be careful about speaking about AMC's FTDs? Likely because there is an ongoing investigation into market fraud and manipulation, and therefore AMC's legal advisors and likely the SEC, FINRA and the New York Stock Exchange have advised him not to discuss FTDs. And that's also likely the reason Adam Aron hasn't discussed synthetic shorting, because it's in that same market fraud and manipulation investigation. Just like Adam Aron doesn't discuss naked shorting, he also doesn't discuss FTDs. Why? Because there's an SEC Department of Justice investigation, and he's trying to avoid being sued as a result. Clearly, one way or another, AMC has discovered something massive about FTDs and synthetic shorting in its stock. They've been to the NYSE and to FINRA as a result, and they're not allowed to discuss the results. Or just not allowed to discuss the results yet until charges are formally brought. And this is obviously happening at a very interesting time, as AMC's FTDs are currently higher than in the 2020 run, and AMC has been on the New York Stock Exchange threshold securities list all month. AMC has now spent 32 business trading days on the NYSE regulation SHO list, a new all-time high, almost as many days as GameStop spent on that list back in January of 2021. I am very excited to see exactly what has been discovered about AMC's FTDs and about AMC's synthetic shorting, and I'm very excited to see when Adam Aron can finally speak on it. But as Frank has tweeted, it's interesting that Congress is now trying to change the rulebook on illegal shorting. He's tweeted saying Congress now says that not all naked shorts are illegal, after it updated its short selling background and policy issues. It says here that a naked short is a short sale conducted without borrowing or arranging to borrow the relevant shares. Naked shorting may result in an FTD to the buyer. For example, the short seller who trades illiquid shares may have trouble buying the securities when the time for delivery comes up. Some naked shorts are in violation of securities laws, but not all naked shorts are illegal. For example, certain market maker activities that involve broker-dealers making a market by committing to continually buying and selling securities even without other buyers or sellers generally do not violate securities regulations, basically expanding and really cementing that bona fide market maker exemption. Also, you can currently get a guaranteed free share of Tesla, a $50 cash reward, and up to 15 free shares, which you could always use to buy more shares of AMC, GameStop, or of Ape. All you have to do is sign up to Moomoo using the link in the description below and make the required qualifying deposit. Moomoo is free, it just requires that temporary deposit, and it's a really great way to support the channel and to support me as well. And on top of that, Moomoo is really easy to use. They've got tons of technical indicators and advanced charting tools and their own options trading platform. Now this part here about continually buying and selling securities even without other buyers or sellers is really, really interesting, because it ties into this extract about a short squeeze right here. It says when short sellers rush to buy back shares to close their positions and retail investors continue to hold their shares or buy more, it can create a supply and demand imbalance, driving the stock price higher. Now this is really, really interesting for two main points. The first main point is because when retail investors hold their shares, that means nobody is selling, but buyers are trying to buy. And it's saying that that results in a supply and demand imbalance, which is actually what we've seen a few times over the last couple of weeks, as tweeted by Dade Murphy, which I've covered in previous videos. We've seen those buy-side supply and demand issues where there's more shares being bought than there is available in the market, and that then throws up an error. So this extract here is saying that that should indeed drive the price higher, because you've got no sellers, but you've got buyers, and that creates a supply and demand imbalance like we've seen, which should push the price up. But the reason why it so far hasn't pushed the price up is because of this bona fide market maker exemption, which allows market makers to sell securities even without available sellers, aka selling synthetic shares, aka naked shorting AMC further. So these two bits of data or these two bits of information again just confirm that AMC is indeed being synthetically shorted. Every time you see that error or that pop-up saying there is a supply and demand imbalance and there's too many buy orders with not enough sell orders, that just means that synthetic shares are about to be released. That means Citadel is about to sell shares when there's none available to sell to those willing buyers, aka just digging themselves deeper into their synthetic shorting position. Now the NYSE is saying that actually this is legal, however crazy that sounds, due to the bona fide market maker exemption. But while it may be legal, which it really shouldn't be, or likely isn't truly legal, again it just means that Citadel digs themselves even deeper into that synthetic shorting mess. That massive amount of security sold and not yet purchased that Citadel is holding gets larger, and that massive amount of derivative liabilities that Citadel is also holding gets larger too. And that just means that Citadel is digging themselves deeper into their hole of liabilities. And it also means that when AMC increases in price, it has to increase in price by less than it previously did to liquidate Citadel. aka if Citadel has a synthetic short position in AMC of $10 billion and AMC's price increases by 10%, Citadel loses $1 billion, 10% of $10 billion. But if Citadel all of a sudden has a $20, $30 or $40 billion synthetic short position in AMC and AMC also increases by 10%, that's a $3, $4 or $5 billion loss. And it means that actually to lose the same $1 billion, AMC only has to increase by 2% to cause that same loss. And it means that actually if and when AMC's price increases by 100%, aka when the AMC price doubles, instead of losing $10 billion on their $10 billion short position, they lose 30, 40 or 50 billion on their 30, 40 or 50 billion synthetic short position. Now I also wanted to clarify this tweet from Dade Murphy that I spoke about yesterday about AMC's short interest disappearing. Dade Murphy tweeted about how AMC's short interest percent of float had decreased in just a few days, down from 30% down to 10%. But actually this seems like a data glitch in Fintel, as it's still showing the short interest is 150 million shares. If 150 million shares was 10% of the float, that would mean AMC's float was 1.5 billion shares. We know AMC's float is only 516 million, so the short interest of 150 million shares is still 30% of the float shorted. It's just Fintel, for whatever reason, thinking the float has all of a sudden gone to 1.5 billion shares. And again, that's also confirmed by Ortex, as Ortex is still showing the estimated short interest percent of free float today has actually increased from 29.9% up to 30.4%. It's showing there's nearly 200 million shares on loan and there's $800 million worth of legally shorted shares currently shorted. So it shows the short interest of AMC hasn't actually disappeared, it's just Fintel with their typical glitches. And finally, I also wanted to talk about this tweet from Crystal Ball, which speaks about the Bank of Montreal loading up on AMC calls. Clearly, as I spoke about in previous videos, the Bank of Montreal also thinks AMC is now a secure investment. AMC is now profitable with positive EBITDA and cash flow in a growing industry, basically meaning AMC is a surefire guaranteed investment, or so the Bank of Montreal believe. That's why they've loaded up on 14.5 million shares worth of call options, or $68.6 million worth of calls. And interestingly, the Bank of Montreal's put position is comparatively tiny. They've got $68 million worth of call options and only $56,000 worth of puts. He asks, what does that tell you? And to me, that tells me the Bank of Montreal expects AMC's price to rocket upwards. That's why they have tons and tons of call options and barely any puts. On top of that, the state of New Jersey also added over 161,000 shares. As I spoke about in previous videos, it will be a brilliant way to expose synthetic shorts, where these institutions magically somehow buy up hundreds of millions, if not billions of AMC shares, when we're still also holding 90% of the flow. That'll sure look great for Fintel, for FINRA, for the New York Stock Exchange, for the DTCC, and for the SEC. When institutions are holding billions of AMC shares, retail investors are also holding billions of AMC shares, but there's still only a few hundred million shares available, aka perfectly exposing synthetic shorts for all to see. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.